Hey guys, we'll look at the Russell chart from today. There was actually a really good setup. We did a midday video for our members. So we'll look back on this chart first. And for people who haven't watched a lot of these videos, basically blue bars mean a move is ending. Yellow bars means we're in a contraction and we're going to start a big move. Okay, so like here's a good example, blue bar high. We look to not continue going long or exit your long, basically following the blue bars up if you were long going into it. There's a contraction here, we broke out, closed, blue bar low, blue bar low. But looking at this pattern, we did have a contraction here and a contraction here, but basically the pattern going into this low is really calculated. And basically how we use, draw that in again. How we use the fibs is a little bit different than most people, but it's really important to understand if you are, really a day trader. So, like this low right here, that's our low target on this move. You'll notice how like that was a good target low. But the important thing to look at is, this is our medium chart, but when you go to the smaller chart, it looks like, we're in a downtrend, right? But we're really not. It's correcting the bigger pattern. Okay, and this is the key to multiple time frames. If you're not using multiple time frames, your odds get really low of making money consistently. You might make money here and there, and might actually feel lucky when you do, but we want to really just kind of wait for the bigger pattern to complete and then enter the small chart in the direction of the bigger. But it's one of those things where you have to learn how to do the bigger pattern first, or the smaller charts, you're really just kind of gambling with them. So yesterday we had a blue bar low. Okay, same thing on the other chart we just looked at. It's meaning that this move down is most likely over. Stop looking to go short. So today we basically opened up. There was a smaller pattern support here, okay, noted in last night's member video. But then during the day we made another video. Basically the bigger pattern kicked in. We came down and made this low. We're not looking to go long right off the low. Okay, that's pretty aggressive. But what we're looking for is this pattern here and this correction, and then this green bar tells us when to go long in the pattern. Okay, so this is a smaller chart. It's a 3-minute chart, but this is pattern completion on the bigger chart, which that pattern was corrective, okay, to an uptrend. So at this point, we're looking for the pattern to complete long on the bigger, and we're trying to catch that with the smaller, okay? So when we're looking at this, yellow bar has picked up this contraction, but we're not looking to go short there. Even though it looks like, from this high, the trend is clearly down, it's one of those things where if it seems too easy, it probably is. And there's a lot of sucker trades, and this is one of them where it looks like it's a can't lose short, right? But since this had bigger odds of support, it held here, and that's how we get this big move up out of this level. Is it short squeezing on everyone? But you shouldn't be short here. So this is, the result. This is making the people pay for taking this easy short trade. It's not an easy short trade because it's not a good one. Okay, and once it comes into this buy zone, where the value of it going back to green is it gives you the where, okay, the pattern, or I mean the when. The pattern gives you where to enter. The next step is when to enter in that area, okay, and so that's what we have the green bar for. So there's our long, here's our stop, okay, and this is where our program is not automated, and everyone wants to know what's the profitability and all of this stuff. I always say it's having something where, in this example, like the stop is 1.5, right, and it makes a move, for 7-8 points. So let's say 2-point stop 8-point move. It's one of those things where if you learn how to catch them, then you have to learn how to stay in them. Okay, so anyways, it's really important to understand the bigger, because the smaller is always going to trade inside of that. And you don't want to go short on a small chart right at bigger support or bigger pattern completion. Okay, when I say bigger support, I'm not necessarily just saying, a prior low or resistance prior high. That's really obvious, right? Anyone can see that. Okay, even if you started trading 2 hours ago, anyone can see it. So those are really emotional, not very tradable areas. But this support is much more valuable than a prior low. Okay, and the bigger trend is still up, so we want to catch the long signals.